Hey, this is Trader Travis, and if you ever wondered what stock options are, they're one of those things where it's better to show you than to tell you, because whenever people ask me what do I do, and I tell them, well, I trade stock options, and trying to explain it is kind of hard. So let me show you, and I want to do that by showing you a trade that had a $590 profit in one day, and it only had that because I bought the stock option contract instead of the stock itself. So let me come here and look at my brokerage account, and let me pull up the chart of Goldman Sachs. Now, if you see here, Goldman Sachs today went up $2.52. And so if we owned 100 shares of Goldman Sachs stock, that's 257 times 100, we would have made $257 profit today. But instead of owning the stock, I actually own the stock option contract. So let me come here for a second and let me move the screen over. So you can see here Goldman Sachs, and you see I owned a December 95 call option. Now what that call option allows me to do is it represents every one of those contracts. Stock options are nothing but contracts that are tied to a particular stock. Now that contract represented about 100 shares of the stock. And that contract's price movement went up and down with the stock. Sort of like bonds. If you're familiar with bonds, stock market bonds, they're tied to interest rates. And so when interest rates go up and down, bond prices go up and down. Well, it's the same thing with stock options. Their price will go up and down with the stock's price movement. So you just saw there Goldman Sachs, it went up $2.57 today, and I would have made $257 with the stock shares. However, I own an options contract, and let me show you what that option contract did. It went up $590 today. And you can see this column right here, profit and loss for today, and I own several other contracts, and all of them together had about $784 profit today. And you can see all those here. Now, I assure you the stocks themselves did not go up $784. It's because I own options on all these stocks. And so these options have a magnified price movement compared to the stock. And it's because of how option contracts are priced. And so if I was to buy one share of Goldman Sachs, it would cost me $99.82. Well, I might can buy the option contract for like $6. And so the stock may go up $2.57, but that option contract sometimes, depending on if it's, sometimes it will go up $2.57 also. So let me pull up my calculator again, and you take 257 divided by $6, and then you see a 42% return on investment compared to the 2% in the stock. Now, I know that seems a little bit unbelievable, but you're seeing it for yourself. This is exactly how stock options are. So let me come here and explain a little bit more. There are actually only two types of stock options, and that's puts and calls. What you just saw was an example of a call option. Call options give me the right to buy a stock at a certain price. Now, as far as a full, complete understanding, that definition is going to make no sense. So here's a summary of it. Call options allow you to make money when stocks go up. You just saw that with Goldman Sachs. The stock went up and, 2% today, but that option contract went up $590. Okay. So if anything, whenever you hear people talk about stock options, the only two things you need to remember, honestly, is that call options allow you to make money when stocks go up. Put options allow you to make money when stocks fall. Now, I won't have time to go over put options in this video, but let me real quick pull up a picture of the SPY, which is the ETF for the S&P 500. Now, we're looking at a weekly chart at SPY, and I wanted to pull up a 5-year just to show you this dip right here. And this was the bear market of 2007 and 2009. And so during this bear market, when some people were losing tons of money and trillions of dollars were wiped out of the market and people lost like 10 years worth of gain. Well, I assure you, not everybody was losing money. I know this for a fact because I'm an options trader. And put options allow you to make money when stocks go down. Now, again, I don't have time to cover that in this video. I'll cover that in another video. But I promise you, if you learn how to trade stock options, you will never go back to regular investing again. In addition to puts and calls, there are several other probably hundreds of different other strategies, but honestly, everything else as it relates to option trading is just a variation or a combination of these two, puts and calls. Now, they have all kinds of other strategies like iron condors, butterflies, vertical credit spreads, leaps. Now, you hear all these different strategies, and guess what? It only involves either put or call or a combination of these two. That's it. But yet, there are hundreds of different variations to use these two in order for you to profit in the stock market. Now, this was just a quick summary. I wanted to show you just the power of stock options because a lot of people don't know about it yet. And so if you want to learn a little bit more about stock options, just click the link below or subscribe to our YouTube channel. What that'll do is just keep you in a loop, and we'll make sure we send more training your way. You take care, and I'll talk to you soon.